Yes, everyone. How are you all? Super, absolutely fine. Okay, then today we are going to start all the expected questions for business combination chapter, which are in my top 95 expected question list. Are you all ready? Can we start? Yes, sir. तो कमिंग टू बिजनेस कॉम्बिनेशन एक बार चेक करते हैं कि बिजनेस कॉम्बिनेशन में हमारे पास कितने क्वेश्चन है. तो यू कैन सी वी हैव 5 questions for business combination. Question number 17, question number 21, 41, 42, 43 of my question bank. Okay, तो let us start with question number 17. हम पहले क्वेश्चन 17 करेंगे. आइए 17 में आते हैं. बहुत ही एक्सपेक्टेड क्वेश्चन है. एमसीक्यू में भी आ सकता है और डिस्क्रिप्टिव क्वेश्चन में भी ये आ सकता है. कैन वी टेक दिस? यस सर. On 1st April 2016, company PQI acquired 30% of voting ordinary shares of company XYZ Limited for 8,000 crore. It means यहाँ पे significant influence है. तो can you say the PQR for PQR XYZ will become associate. PQI account is investment in XYZ using equity method as prescribed under Ind AS 28. Okay, sir. At 31st March 2017 at year end, PQI already recognized share of the net asset changes of XYZ using equity method as follow. तो उन्होंने 31st मार्च में ईयर में एंड में ये फॉलोइंग प्रॉफिट फ्रॉम एसोसिएट को रिकॉग्नाइज कर लिया है. क्या क्या? शेयर इन प्रॉफिट लॉस 700, शेयर ऑफ एक्सचेंज डिफरेंस OCI एंड शेयर ऑफ रिवैल्यूएशन रिजर्व ऑफ PP इन OCI. तो फॉर दिस हम क्या जनरल एंट्री पास करते हैं? इन्वेस्टमेंट अकाउंट डेबिट to share in profit from associate and that share in profit from associate will be transferred to retained earning. इसके लिए क्या एंट्री पास करेंगे? इन्वेस्टमेंट अकाउंट डेबिट टू शेयर इन OCI from associate and that will be transferred to FCTR. तो इसको हम FCTR में ट्रांसफर कर देते हैं. करेक्ट. एंड इसके लिए जनरल एंट्री पास करेंगे इन्वेस्टमेंट अकाउंट डेबिट टू शेयर इन प्रॉफिट फ्रॉम एसोसिएट एंड दिस विल बी ट्रांसफर टू रीवैल्यूएशन सरप्लस. ये आपका रीवैल्यूएशन सरप्लस में ट्रांसफर हो जाएगा और ये रिटेन अर्निंग में ट्रांसफर हो जाएगा. ओके. एंड आफ्टर दिस जनरल एंट्री व्हाट इज द कैरिंग अमाउंट ऑफ इन्वेस्टमेंट एसोसिएट एज पर इक्विटी मेथड? दैट इज 8,000 प्लस ऑल दिस 3. तो वो कितना आ रहा है? दैट विल कम 8850. तो लिखा था कैरिंग अमाउंट ऑफ द इन्वेस्टमेंट इन द एसोसिएट ऑन 31st मार्च was therefore 8850. Okay sir, यहां तक तो क्वेश्चन है. Now what is the requirement of the question? On 1st April, PQI acquired the remaining 70% of XYZ. So control is obtained on this date. Ind AS 103 will be applicable and we to calculate goodwill or gain on bargain purchase. It will be case of step acquisition. Okay, for a cash of 25,000. कितना consideration pay किया? 25,000 crore. The following additional info is relevant. फेयर वैल्यू ऑफ 30% इंटरेस्ट ऑलरेडी ऑन 9,000. तो आपको अपने मींस ऑन द डेट ऑफ एक्विजिशन मींस व्हेन कंट्रोल इज ऑब्टेन एज पर इंड AS 103 यू नीड टू रीमेजर द प्रीवियसली हेल्ड इक्विटी इंटरेस्ट एट फेयर वैल्यू और जो भी रीमेजर में गेन लॉस है उसको आप PL या OCI में ट्रांसफर करोगे एज द केस में भी. अगर क्वेश्चन साइलेंट है तो हमेशा PL में ही ट्रांसफर करना. ओके. फेयर वैल्यू ऑफ आइडेंटिफाइबल नेट एसेट इज 30,000. हाउ शुड सच बिजनेस कॉम्बिनेशन बी अकाउंटेड फॉर? वेरी सिंपल. तो आपका जनरल एंट्री क्या होगा मुझे बताइए. यू विल से बैंक अकाउंट, सॉरी INA अकाउंट हाउ मच? 30,000. ओके करेक्ट. टू कैश हाउ मच पेड? दैट इज 25,000. and to investment what is the carrying amount? 8850. and to remeasurement gain that is transfer to PL वो कितना होगा? 9,000 minus 8850 that is 150. correct? understood. ये आपका जनरल एंट्री हो गया. तो we have done one compound journal entry and the difference will be goodwill or gain on bargain purchase. तो difference कितना है चेक कीजिए. that is 25,000 प्लस 9,000 माइनस 30,000. तो आपका गुडविल कितना है? गुडविल इज इक्वल टू 4,000. करेक्ट. ये तो आपका Ind AS 103 का जनरल एंट्री हो गया. गॉट दिस पॉइंट? Now what our Ind AS 28 says that whenever equity method is discontinued, तो जो भी आपका OCI component था in relation to associate that will be closed and will be either reclassified to PL or will be transferred retained earning as per respective Ind AS. तो यहाँ पे जो revaluation surplus है that will be transferred retained earning, that will not be reclassified to PL. तो क्या जनरल एंट्री पास करोगे? revaluation surplus to retained earning. और जो आपका FCTR है as per the requirement of Ind AS 21 that will be reclassified to PL. तो आप एक जनरल एंट्री पास करोगे FCTR to PL. to PL means to gain on disposal that will be transferred to PL. तो अल्टीमेटली आपका गेन कितना हुआ? 150 प्लस 100 that is 250 का गेन हो गया. इसको आप कंपाउंड जनरल एंट्री कर सकते हो एज पर आईसीआई सॉल्यूशन. तो देखिए आई ने कितना 30,000, गुडविल 4,000, एफसीटीआर 100, रिवैल्यूएशन सरप्लस 50, कैश विल बी क्रेडिटेड 25,000. ये आपका क्रेडिट हो जाएगा. ओके सर, मिनट. तो दिस विल बी क्रेडिटेड, ये आपका क्रेडिट हो जाएगा. एंड द इन्वेस्टमेंट विल बी 8850. आपका रीमेजरमेंट गेन था 150 का और एफसीटीआर था 100, तो ये हो गया 250. एंड दिस विल बी ट्रांसफर्ड टू रिटेन्ड अर्निंग. रीवैल्यूएशन सरप्लस विल ट्रांसफर रिटेन्ड अर्निंग. सुपर इजी क्वेश्चन, इंपॉर्टेंट, एग्जाम के लिए इंपॉर्टेंट है. रिसेंट अटेम्प्ट में आया नहीं है, एग्जाम में आ सकता है. ओके सर, कमिंग टू द नेक्स्ट क्वेश्चन. नेक्स्ट क्वेश्चन क्या चेक करेंगे? कमिंग टू क्वेश्चन नंबर 21. 21 में आइए कौन सा क्वेश्चन है? तो कमिंग टू क्वेश्चन नंबर 21. तो 21 इज अ क्वेश्चन जहां पर आपको दो केस दिया हुआ है कि AX and BX will become ABX. तो इफ इट इज बिजनेस कॉम्बिनेशन अंडर कॉमन कंट्रोल तो क्या होगा? और इफ इट इज अ बिजनेस कॉम्बिनेशन नॉट अंडर कॉमन कंट्रोल होगा तो क्या होगा? मींस इट विल बी केस ऑफ रिवर्स एक्विजिशन. तो पहले हम रिवर्स एक्विजिशन करेंगे, फिर हम कॉमन कंट्रोल के लिए बातें करेंगे. ओके सर. तो AX and BX amalgamated on and from 1st Jan 2002. A new company ABX was formed to take over the business of existing company. तो आपको AX and BX का बैलेंस शीट दिया हुआ, यू कैन सी इट. ABX issued requisite number of shares to discharge the claim of equity shareholders of transfer company. Whenever they say requisite number of shares, it means you need to calculate the required number of shares for the purpose of this business combination. Required means minimum. It cannot be unnecessary excess number of shares. Okay, yes sir. Prepare notes showing PC and discharge thereof and draft a balance sheet of ABX, assuming that both the entities are under common control, assuming BX is a larger entity and their management will take the control of the entity. Means it is not a business combination under common control. So can you see, for this we'll apply pooling of interest method, and for this we'll apply acquisition method as per Ind AS 103, but it is a case of reverse acquisition. It will be a case of reverse acquisition. तो पहला पॉइंट नंबर बी करेंगे. विल डू फर्स्ट पॉइंट नंबर बी. फेयर वैल्यू कितना दिया हुआ नेट एसेट का? AX and BX. तो दे हैव गिवन फेयर वैल्यू फॉर फिक्स्ड एसेट मींस प्रॉपर्टी प्लांट एंड इक्विपमेंट, इन्वेंटरी, एंड द फेयर वैल्यू ऑफ बिजनेस इज गिवन. Whenever they give fair value of business, it means it is the fair value of net asset including goodwill. So it is net asset including goodwill. तो यहाँ पर goodwill का वैल्यू भी included है. I mean this is not fair value of INA. This is the fair value of net asset plus goodwill. Okay sir, yes sir, this is the question. So first we'll do point number B, then we'll take point number A. Okay sir. So can you say it is of course a reverse acquisition and AX and BX become ABX. So ABX is a legal acquirer. But out of AX and BX, one will be accounting acquirer, another will be accounting acquiree. So ABX is only a new company formed for a mechanism, means it is only a vehicle for the legal acquiring, So either AX or BX will be an accounting acquirer. It is given in the question that BX is the larger entity and their management will take the control of the entity. It means BX is the accounting acquirer. So from the information given the question, we can identify BX as a accounting acquirer, AX as a accounting acquiree. Got this point? Let's see how the solution should be drafted. Now solution should be drafted in a proper way. Means if you are not drafting the solution in a proper way, they will not give you marks. Okay sir, chalega. So how to write down the solution, that we need to understand. Correct. So first you can see working note number 1, identification of accounting acquirer. Correct. Okay sir. So in the given case, out of AX and BX, BX is the larger entity and their management will take the control of ABX, that is combined entity. Therefore, BX is identified as an accounting acquirer and AX is identified as accounting acquiree. Hence, it is a case of reverse acquisition. Now, this we need to prove by also finding the voting interest of the owner, of AX and BX in the combined entity. So, what we'll do? This can be justified by the following working note. So we are just giving a justification कि out of AX and BX is the accounting acquirer. For that justification is given as per ICAI solution. However, that justification was not required, but because they have given justification in the ICAI solution, I have also given the justification. Calculation of voting right of AX and BX in ABX. So AX and BX, what is the fair value business? This is 11,000 and 14,000. From my point of view, there is no need to calculate number of shares. You can find out voting right from this fair value business, because voting right will be, voting right will be based on the fair value business only. That is understood point. But in your ICAI solution, first they have calculated number of shares, and then from that number of shares they have calculated what voting right. So what we have done, will divide by the issue price of ABX. Issue price of ABX, but because issue price of ABX is not given, therefore we'll assume issue price is equal to face value of ABX, and face value is given the question, that is rupees 10, and then we have divided by rupees 10. It is a face value of legal acquirer. Who is the legal acquirer? ABX. Actually we should divide by issue price, but issue price is not given, and therefore we are assuming shares can be issued at what? Face value, that is at par. So number of shares to be issued based on the fair value business is 1100 and 1400. So the total number of shares become 2500 in the combined entity based on the fair value business, based on the fair value of business. Got this point? So 1100 divided by this is 44%. 1400 divided by this 56%. From this, it is understood that in the combined entity, the owner of BX will get the largest portion of voting right, and therefore BX will be the accounting acquirer and AX will be the accounting acquiree. So this can be justified from this solution. Now we'll do calculation of effective PC. So how to find out effective PC, that we need to understand. Whenever there is a reverse acquisition, we will always say it is an effective PC. So just try to understand. What we'll assume, that ABX will issue how many shares to BX for 56%. Correct now. So you can see the number of shares in the books of BX, in the balance sheet of BX is how much? It is how much? 700. 7,000 divided by 10. So what we'll assume, that for 56%, ABX will issue 700 equity shares to the owner of BX. Are you getting what I am saying? So what we'll assume, the number of equity shares to be issued to the owner of BX to maintain the 56% voting right is 700. So how many shares will be issued by ABX to the owner of AX to maintain 44%? So what will do? 700 divided by 56 into what? 44 into 44. The number of equity shares to be issued to the owner of AX to maintain 44% voting right will be 550. That is what? 700 divided by 56 into 44. In this way we can calculate. So can you see, in this case what happened? The legal number of shares and effective number of shares will be same. So this is the way to find out where legal number of shares and the effective number of shares will be same. So this is the actually the practical way of calculating the number of shares, and therefore in the question they have said requisite number of shares. Okay sir, yes sir. Now the fair value of effective consideration. So can you see, this shares has been issued as if BX has acquired AX. So we'll multiply the number of shares to be issued, that is 550, with the fair value of equity shares of BX. Fair value of equity shares of BX, because the fair value of business is given, we can find out the fair value of equity shares of BX. So what is the fair value of business of BX? That is 14,000. 14,000 divided by 700, that is 20 rupees per share. 20 rupees per share. So can you say what is the fair value of equity shares of BX? That is 20. Therefore 550 into 20 is 11,000. Can you see, this will be always equal to the fair value of business of AX only, but then also you need to calculate in this way. You can't apply any shortcut. Now 20, 10 rupees will be capital and 10 rupees will be premium. So out of this, 5,500 will be transferred to capital and 5,500 will be transferred to securities premium. Now of course we can prepare the balance sheet. There is no doubt. But before that, we need to calculate goodwill or gain or bargain purchase. Correct. So fair value of effective piece is 11,000, and we'll find out fair value of INA. So apart from PP and inventory, all assets and liability will be acquired at fair value, and the fair value will be equal to the book value, whatever is given in the question. So you can see PP and inventory has been taken at fair value given in the question. You can see the AX PP how much given? 9,500. Inventory how much given? 1,300. Got this point? Yes, sir. Apart from that, investment, trade receivable, cash and cash equivalent, and liability are taken at book value, because the fair value is not given. This become fair value of INA. This minus this will be the goodwill. So you can see this was inclusive of goodwill amounting to rupees 900. Now you can prepare the balance sheet. Now in the balance sheet, what you will do, I'll just explain from the question only. So in the balance sheet, can you see in the balance sheet of BX, you will add the assets and liability of AX. You will add assets and liability of AX. How much? So this will be add how much? 9,500. PP book value plus fair value. Then investment will come how much? Investment 1050 only. Inventory, it is 1,300 fair value. 1,300 fair value. Then trade receivable 1,800. Then cash and cash equivalent 450. Then equity share capital will be 5,500. Then other equity will be, can you say 5,500. Securities premium will come. Just try to understand, reserve and surplus of accounting acquirer will not be incorporated in the financial statement of accounting acquirer. Normally student add 3050, that is totally a mistake. Okay, in this it will be plus 3,000, this will be plus 1,000, and goodwill how much will come? Goodwill come 900. If you total this, balance sheet will tally. Balance sheet will tally. This is super easy balance sheet. Okay sir, any doubt? I think no doubt. समझ में आया ये? Have you understood this point? बोलिए. Got this point? So this is point number B done. Now let us do point number A. Point number A क्या है? Point number A is what? When both the entities are under common control. So whenever both the entities are under common control, it is as simple as, very simple, means only you need to do plus 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 all the item. Correct? So whenever we have both the entities are under common control, we apply appendix C to Ind AS 103, that is pooling of interest method. Pooling of interest method. Only we need to understand how to find out the number of shares to be issued to the owner of AX and BX. To be issued to the owner of AX and BX. So what we'll do, because in this case also they have given what? They have given requisite number of shares to be calculated. So what we'll do, if business combination is under common control, appendix C to Ind AS 103 is applicable for the accounting treatment in the books of transferee company as per pooling of interest method. That you should write down. Always whenever they have asked question of business combination under common control, you should write down this fact that we are applying pooling of interest method. Now calculation of PC, that is the number of equity share to be is to the owner of AX and BX. Okay, so what we'll do, because can you say, we know that in pooling of interest method we record the assets and liability of transferor company at book value. Therefore we'll take book value of net asset. AX, it is 9,050, BX, it is 9,700, because there are two transfer company, therefore we are adding both. So this becomes the total net asset in the combined balance sheet. But as per pooling of interest method, reserve and surplus of transfer company need to be maintained. Reserve and surplus need to be maintained. So from this we'll do reserve and surplus to maintain. AX itna, BX itna. That is also given the balance sheet. This is given the balance sheet. Means can you see, this becomes the total equity share capital required. Total equity share capital required in the combined balance sheet. In the combined balance sheet. Can you see, we should divide it by the issue price of ABX, but issue price is not given. So we'll assume that shares are issued at par. Why I am saying that, you should know it should be divided by issue price of ABX, but issue price is not given. We'll assume shares are issued at par and divided by 10, and that becomes the total number of equity shares of ABX. Total number of equity shares of ABX. And now this 1,300 should be allocated. This 1,300 should be allocated to the owner of AX and BX in the ratio of net asset. In the ratio of net asset. Understood? That we can do. That we can do. So you can see I have allocated 1,300 and 1,300 in the ratio of net asset. In the ratio of net asset. That we'll find out. But as per ICAI solution, they have not allocated 1300, they have allocated 13,000. Means they are allocating 13,000. From my point of view, it is not correct, because if, of course, if the issue price is 10, then okay, 1300 or 13 means it is okay. But if the issue price is more than 10, then first we should find out number of shares from my point of view. But we'll follow ICAI solution. If they have given same to same question, I will say allocate 13,000 in the ratio of net asset. Now net asset means what? Whether we should allocate in the book value of net asset, means whether it should be allocated in the ratio of book value of net asset, in the ratio of fair value of net asset. From my point of view, it should be fair value of net asset, but as per ICAI solution, it should be allocated in the book value of net asset. So we'll follow ICAI solution. It should be allocated in this ratio only, 9050 and 9700. And if you allocate this, the answer will be 6275 and 6725. So you can do this. Now balance sheet is very simple. All asset book value, book value. All liability book value, book value. Reserve and surplus book value, book value. Equity share capital, this plus this will come, and that will be equal to 13,000, and balance sheet will tally. Balance sheet will tally. This is super easy question. Till now not asked in exam, can be asked in exam. Now out of this A and B, B has been asked in exam, but A is not yet asked in exam, which can be also asked in exam. Chalega? Okay sir, yes sir. Now let us come to the next point. Question number 41. Come to question number 41. What is question 41? Check करेंगे. Question number 41. This is also good question. Good question, but in this question there is one mistake, and from my point of view that mistake should be rectified, but if not rectified, we need to follow the ICAI solution only. Okay. Mini Limited is a manufacturing entity in the textile industry. Mini Limited decided to reduce the cost of manufacturing by setting up its own power plant for the captive consumption. As per the market research report, there was non-operational power plant in nearby area. Hence, it decided to acquire that power plant, which was having a capacity of 80 megawatt, along with entire labor force. Along with entire labor force. I think whenever I have done the business definition, I said whenever assets and liabilities are acquired with labor force, we'll always assume this labor as skilled labor if the question is silent, and that indicate that whatever acquisition you have done, that is a business acquisition, not asset acquisition. Whenever they say labor force, so it means it is a business from examination point of view. From examination point of view. Got this point? This point entity was owned by another entity, Max Limited. Mini Limited approached Max Limited for the acquisition of 80 megawatt power plant as following terms. Mini Limited will seek an independent valuation for determining the fair value of power plant. Value of other non-current asset acquired and non-current financial liability assumed is this. Consideration agreed between both the parties 51 million. This is the PC given in the question. Thank you very much. Both the parties agreed to terms and entered into agreement on 1st April 2001. Agreement is on 1st April 2000. From this we can understand this is the date of acquisition. Date of acquisition. So 1st April 2001 is the date of acquisition from the information given in the question. From information given in the question with immediate effect. Due to unavoidable circumstances, valuation could not be completed by the time Max Limited finalized financial statement for the year ended 31st March 2001. Max Limited annual financial statement record the fair value of 80 megawatt power plant at 46.90 million with its remaining useful life at 40 years. From this, it is not we are not able to understand one thing, that if the date of acquisition is 1st April 2001, why they are finalizing the financial statement on 31st March 2001? Means the question there is one typo mistake. This should be 31st March 2001. Means the date of acquisition should be 31st March, not 1st April. This is one typo mistake. I think if the same question asked in exam, they can change it. So 1st April 2001 is not the date. There is some typo mistake. There is some critical mistake. It should be 31st March, not 1st April. If the 31st March is the date of acquisition, so we need to account for business combination for the financial statement for the year ended 31st March 2001. Got this point? And in that we need to record the fair value of power plant. Fair value of power plant to what they are saying. Max Limited annual financial limited. Max Limited. It is given Max Limited. Max Limited Annual financial statement record a fair value of 80 megawatt power plant at 46.90 with a remaining useful life of 40 years. Means they have given the fair value as per Max Limited point of view. Okay, yes sir. Max Limited also has a license to operate that power plant unrecorded in the books as on 31st March 2001. You can see they have given the fair value once again as on 31st March. Means kahin na kahin indication is that the date of acquisition should be 31st March, not 1st April. Are you able to understand what I am saying? Yes sir. So they have given unrecorded. So can you say any asset which is not recorded in the books of account of acquiring company can be recognized in the books of acquirer company if it meets the definition of assets and liability as per conceptual framework. Here, of course, it is a license, and of course, if nothing is given, we'll assume that it will meet the definition of intangible asset, and therefore it should be recognized at this fair value. Yes, sir. 6 months after acquisition date, Mini Limited received the independent valuation which estimated the fair value of 80 megawatt power plant at 54.90 million. Just try to understand, this is a question, this is a point of measurement period, but measurement period point will come when the year end is 31st March and the date of acquisition is before 31st March. But can you say here the date of acquisition is 1st April, and can you say for 1st April financial statement is going to finalize after 31st March 2002, that is 1 year now. So from this also we can understand there is some typo mistake, and if it is a question of measurement period, the date of acquisition should be 31st March, not 1st April. Okay, sir. I hope you are understanding. Yes, sir. And during the measurement period, they have identified that it is not 46.9, it is 54.90. CFO of Mini Limited want you to work upon the following aspect of the transaction. Determine whether transaction should be accounted as asset or business. So, of course, it is a business combination. You should write down the meaning of business. Then 3 elements. What is the meaning of business? Business is an integrated set of activities and assets which are capable of being conducted and managed for the purpose of providing goods and services to the customer or providing investment income or for generating income from any other ordinary activities. Then you should write down that, of course, there should be minimum requirement of input, process, and process when applied on input should be capable of generating output. Got this point? So can you say, of course, can you say here we have input and the process is substantive process that you can write down, that can be understood from the point that with the power plant they are also acquiring labor force, which indicate that process whatever we are acquiring, that is substantive, and of course the output is there, and if all 3 elements are there, it will be a business acquisition. This much you can write down. Then calculate goodwill or gain or bargain purchase due to above acquisition. Then you can find out goodwill will be what is the PC is 51 minus, we'll do INA is fair value of INA, so INA will be how much? Your power plant is how much? 46.90. License is what? 5. Then non-current asset is how much? 11.10. And there is a liability of what? 32. How much it is coming? 46.9 plus 5 plus 11.1 minus 32. So that is 31. So 51 minus 31. Am I doing correct? Let's see. It is what? 20. The goodwill is 20 only. Very simple. I was doing fast, so I was thoda confused whether I am doing correct or not. So 20 million is the goodwill. You can easily calculate point number 2 also done. Then past necessary journal entry in the books of Mini Limited. Only one journal entry. Power plant account debit. Intangible asset account debit. Non-current asset account debit. Non-current financial liability, to cash, and the difference will be goodwill. The journal entry you can do. Journal entry is given, you can see this journal entry will do. Power plant account debit, intangible asset account debit, other asset, liability, goodwill, and bank 51. That you can do. Okay, sir? Okay, sir. Then determine whether any adjustment required in case of valuation received subsequent to acquisition. If yes, past next journal entry in the books of Mini Limited. Yes, due to measurement period. Can you say, because first initially we have done accounting on provisional basis, now we will do accounting on actual basis, that is based on the fair value whatever we have received during measurement period, and you can see 46.9 has been increased to 54.90. How much increase? 54.9 minus 46.9, it is 8. So can you say your power plant will increase by 8 and your goodwill will decrease by 8. So one journal entry will do during measurement period, that is power plant account debit to goodwill. Power plant account debit to goodwill. You can see they have also done that journal entry. Power plant account debit to goodwill 8 million. But this journal entry will be done in the next financial year. Okay, the next financial year, if the date of acquisition is 1st April 2001, the next financial year will be after year end now. Therefore, I am saying that next financial means the date of acquisition should be 31st March. And this journal entry should be done in the next financial year means 2001, 2002, and this should be adjusted by retrospective restating the previous year. By doing retrospectively restating the previous figure. Understood? And from my point of view, this is totally bakwas journal entry, because can I say for the previous year, if the date of acquisition is 31st March 2003, there will be no depreciation on that, because can I say it has been acquired on 31st March. But what they have done, because they have considered date of acquisition 1st April, and because after 6 months they have received the information, so 6 month depreciation they have charged, which is totally bakwas. But I will say follow ICAI solution, you also pass journal entry for 6 months. But if they have corrected it, means if they have corrected the date of acquisition, then this journal entry will not come, only this journal entry will come. Okay sir, got this point? Are you able to understand? Yes sir. So of course, how this they have calculated 8 million. What is the useful life? Useful life is what? Useful life is, acha, balance sheet too you can draw. Balance sheet is very easy. After this journal entry, balance sheet is super easy that you can draw. In that, no doubt. What was the useful life? Useful life of power plant was how much? How much? It was there 40 years. So 8 million divided by 40 into 6 by 12, it is coming 0.1, and therefore they have also done the journal entry with 0.1. But from my point of view, that is not correct. But if the same to same questions come to subsequent accounting, they have written about measurement period. This much you don't write, only you give this to journal entry, more than enough. Okay sir, only write down something about measurement period. Okay sir, the same question can be asked for 8 to 10 marks, 8 to 10 marks or 14 marks also. The next question is what? Coming to 41 done, then 42. 42 mein aaiye. Let us come to 42. This is also good question. Similar type of question can be again asked in exam. The draft balance sheet of Swan Limited and DAC Limited as at 31st March 2023 is as under. You can see Swan Limited, DAC Limited. Okay sir. They have given PP, investment, inventories, financial asset, trade receivable, cash and cash equivalent, other current asset, equity, share capital, Swan Limited 10, DAC Limited 100. Other equity, financial liability, long-term provision, deferred tax, current liability, financial liability, short-term borrowing, trade payable. On 1st April 2003, business combination happened. Swan Limited acquired 80% of equity shares of DAC Limited. Swan Limited agreed to pay to its shareholders of DAC Limited 20 rupees per equity share in cash, to cash payment, and to issue 5 equity shares or rupees 10 each of Swan Limited in lieu of every 6 shares. So what is the swap ratio? 5 by 6 held by the shareholders of DAC Limited. The fair value of shares of Swan Limited 100. So 100 is the fair value of equity shares. Okay. Swan Limited also agreed to pay an additional consideration being higher of 90 lakh and 30% of any excess profit in the first year after acquisition of a DAC Limited profit in the preceding 12 months. This is a very popular information, have been asked 3 times in exam. Means in this there are 2 type of consideration. One is deferred consideration to the extent of 90, and any excess payment which is right now contingent will be contingent consideration, correct? So deferred consideration 90 lakh, because in any case 90 lakh need to be paid. So that become deferred consideration. You can see this amount is payable after 3 years. So this 90 lakh will be multiplied by present value factor at the end of 3rd year. That we can do. Correct. But you can see what they have given. DAC Limited earned 30 lakh profit in the preceding year and expect to earn only 40 lakh in the financial year. So what is the excess? Excess is only 10, and 30% of excess will be less than 90. Means can I say contingent payment is not probable? Whenever contingent payment is not probable and the fair value of contingent consideration is not given, we'll always assume it to be 0. It means deferred consideration will be taken into consideration, but because contingent consideration is not probable, we'll assume it to be 0. The fair value will be assumed to be 0. Okay sir. Then fair value exercise resulted in the following. The fair value PP and investment is given 1200 and 300. Okay, sir. Duck Limited own a popular brand name that meet the recognition criteria of intangible asset under Ind AS 103. Independent valuer have attributed a fair value of 250 lakh for the brand. So this will be the fair value brand which will be recognized in the financial statement of acquirer company. However, the brand does not have any cost for the tax purpose and no tax deduction are available for the same. It means the tax base will be zero. It means the tax base will be zero because there is no cost price. So of course there is no deductible amount, but it means the tax base will be zero. Understood? Yes, sir. Following is the statement of contingent liability. For contingent liability, always it will be recognized in the financial statement of acquirer company. If the fair value is given, so you can see the fair value of two contingent liability is given. So even though some information has been given about outflow of resource not probable, that is Bakwas point. If the fair value of contingent liability is given, that will be recognized in the financial statement of acquirer company at fair value. So there is lawsuit filed by a customer. It is not probable. This is totally bakwas point. Ignore it. Any amount which would be paid in respect of lawsuit will be tax deductible. Means it will be tax deductible only when the amount is paid. Means right now the tax base will be zero. Okay, sir. Then income tax demand of 70 lakh. The fair value is given 20 lakh, and you can see this information is not relevant because if the outflow is not probable, then also it can be recognized as provision in the financial statement of acquirer company. Okay. Yes, sir. In this case, you can see no information about tax. Income tax act is given because the income tax is always permanently disallowed. So whenever any item is permanently disallowed, I have said tax base either you consider as zero, but the difference will be ignored for deferred tax calculation, or you assume tax base is equal to carrying amount. So you can assume tax base equal to 20 for simplicity, for simple calculation, or you ignore this entire information for deferred tax calculation because it is an item of permanent difference. Okay, sir. Yes, sir. Duck Limited has certain equity settled share-based payment award which were replaced by the new award issued by Swan Limited. As per the terms, the total vesting period is 5 years and the expired period is 2 years. Okay, sir. Yes, sir. Now, as per the new award, because it is replaced by the new award, the vesting period has been reduced to 1 year. That is 1 year from the acquisition date. So, can you say 1 year from acquisition date because the remaining period was 3 years. Now, it has been reduced to 1 year. It means now the remaining period is sorry, one second. As per the new award, the vesting period has been reduced to 1 year. Sorry. So can you say remaining period was 3 years reduced. The vesting period has been reduced to 1 year. That is 1 year from acquisition date. So remaining vesting period 1 year. What is the expired period? 2 years. Therefore, can you say replaced vesting period will be 3 years. Replaced vesting period will be 3 years. I hope you understood this point. The fair value of award on acquisition date was original award 12 lakh, new award 18 lakh. So we need to find out how much amount is attributable to pre-combination period. So out of this 18 lakh, what is the fair value of replaced award 18 lakh? How much will be attributable to pre? How much will be attributable to post combination period? So pre one formula is what? Fair value of original award multiplied by expired period divided by original vesting period 5 year, replaced vesting period 3 year, whichever is greater. So of course we'll do divide by 5. It will be 12 into 2 divided by 5 means it will be 4.8. And what is the amount attributable to post combination period? It will be 18 minus 4.8. But this information not relevant for this particular question because that is related to subsequent accounting. वो subsequent accounting के लिए जरूरी है, ऑन द डेट ऑफ एक्विजिशन के लिए जरूरी नहीं है. तो जो प्री कॉम्बिनेशन पीरियड में आपने कैलकुलेट किया 4.8 दैट विल बी इंक्लूडेड इन द अमाउंट ऑफ पीसी, उसको आप पीसी में इंक्लूड कर दीजिएगा. ओके सर. यस सर. Further, Swan Limited has also agreed to pay one of the founder shareholders of Duck Limited a sum of 15 lakh provided he stay with the company for 2 years after acquisition. तो यहाँ पे एक contingent payment है क्योंकि अगर ये फाउंडर मेंबर कंपनी में रहेगा तभी आप इसको पेमेंट करोगे. तो वी हैव डन वन पॉइंट दैट इफ एनी अमाउंट इज पेएबल टू एम्प्लॉय शेयर होल्डर्स इट विल बी इंक्लूडेड इन द पीसी only when the contingent payment is not forfeited even though employee terminate. But in this case, the contingent payment will be forfeited once the employee terminated. Therefore, it is in the capacity of employee, not in the capacity of owner. Therefore, it will not be included in PC and therefore no accounting treatment for this. Because जब इसको पे करेंगे तब ये EB expense होगा, अभी इसका कोई लेना देना नहीं है. It will not be included in PC. The acquisition cost is 26 lakh. This will be charged to profit and loss account immediately. So one journal entry will do acquisition cost. You can say acquisition expense, account debit to bank. So your bank will reduce by 26 lakh and acquisition cost will be debited or retained earning. तो दो effect होगा. The applicable tax rate is 30%. This is means deferred tax need to be calculated. Assume 10% discount rate, that is for deferred consideration. Also assume unless otherwise stated all items have the fair value and tax base equal to their carrying amount at acquisition date. So it is given that all items have fair value and tax base equal to the carrying amount. Of course, if this is the general assumption, you are required to prepare consolidated balance sheet. Good question. Similar question or same to same question can be asked in exam. Okay, sir? Yes, sir. Can we handle it? Yes, sir. Can we do it? So I have the solution. Let me explain from that to save time. You can see we are doing question number 42. So first we'll calculate PC. So there is a cash payment. First cash payment is 20 per share. How many shares acquired? 80% shares acquired. Out of how much? So out of how much you will find out from where? From the balance sheet. If you go to the balance sheet, you can see it is 900 divided by 100. It means how many lakh shares? 9 lakh shares. So 9 lakh shares to 80% of 9 lakh into what? Into 20 will be the cash payment. Then coming to the fair value of equity shares issued. So once again 80% of 9 lakh multiply by swap ratio already given 5/6 and multiply by fair value of equity shares of acquired company, that is given 100. You can see 80% 9 into swap ratio into fair value. First you always calculate this bracket 1. Bracket 1 means yellow one, that is the number of share to be issued. The number of share to be issued is 6 lakh. 100 is what? The fair value, and this become the PC in the form of equity shares. Out of this 100, 10 is capital and 90 is premium. This you be careful while preparing the balance sheet. Okay, sir. Then fair value of deferred consideration, can you say 90 lakh into present value annuity factor at a rate of 10% for 3 years, that you can find out, and this will be the fair value of deferred consideration. Fair value of contingent consideration, in this it will be nil because it is not probable. It is not probable. Fair value of replace SBP award attributable to pre-combination period, already I have calculated 4.8 lakh. So this is the amount of PC. This is the amount of PC. One note I have given about direct cost of acquisition of 26 lakh. This will not be included in the amount of PC. This will be charged to profit and loss account as an expense on the date of acquisition. One more note I have given, additional payment of 15 lakh will not be included in PC because it will not be included in PC because it is a payment to the employee shareholders which will be terminated, which will be forfeited once the employee terminated. Okay, sir. Yes, sir. Now, working note number 2, calculation of fair value of INA and DT. This is very, very important. So, you need to take all the assets and liability, correct? And the tax base of that assets and liability. If the tax base is not given, it will be equal to carrying amount. Okay. So, they have given only fair value of 2 assets. Initially, one is PP, one is investment. So, can you say for PP, investment, fair value is given? For inventory, trade receivable, cash and cash equivalent, other current assets, can you see will take book value as per the information given the question? Similarly, if long-term borrowing, long-term provisions, short-term borrowing, trade payable will take the book value as per the information given the question. Correct. Now, normally students forget about the assets and liability which are given as an additional information. So, whenever you have INA, just go to the additional information and just identify whether there are some additional information, some other assets and liability which were not recognized in the balance sheet of acquiring company. That is given. Yes, one brand is given, fair value is 250, and 2 provision is given. One is 5, one is 20 fair value, one is lawsuit, one is income tax demand. Okay, sir. This become total fair value of INA. Now we'll find out tax base. So tax base, can you say if nothing is given, it will be carrying amount. But we know the tax base of brand, that is 0. We know the tax base of provision, this is 0, and we know the tax base of income tax demand because that is an item of permanent difference. I said it will be equal to the carrying amount, that is 20 only. This is initial carrying amount. Okay. For other, because no information has been given, it will be equal to carrying amount. So for this all I have taken carrying amount, and you can find out fair value and tax base. This become the total. The difference will be, because this is more than this, that because you'll find the net amount, and the difference will be a taxable temporary difference, because the fair value is more than tax base. Fair value is nothing but initial carrying amount. So carrying amount is more than tax. Carrying amount is more than tax base is taxable. Taxable means DTL will apply 505 into 30%. DTL will be deducted, and this minus this will be the fair value of INA. Fair value of INA we can easily calculate. Bolo yes or no? Yes, we can calculate fair value of INA. Now we'll come to calculation of goodwill or gain or bargain purchase. Let us find out calculation of goodwill. We'll take, because we have acquired 80%, PC already we calculated. Then NCI 20%, nothing has been given, it means pasina method. So 20% of this amount, 20% of this amount we can find out, then minus fair value of INA. This will be the goodwill, this will be the gain on bargain purchase, because this amount is less than this amount. Correct now? Got this point? So it will be gain on bargain purchase, which will be transferred to capital reserve. Okay, sir. Okay, sir. Now, what I always suggest that whenever they have given this type of question, always think about journal entry, because if you do journal entry, you will never do mistake. But the INA will be how much? Excluding DTL 1805. Write down 1805, because in INA you will not do mistake. Then can you see here, it will be to DTL how much you have calculated, 151.5. To cash payment PC how much, 144. To equity share capital at nominal value 60. To securities premium, that is 6 into 90 will come. Then one deferred consideration will come. Deferred liability will be shown in borrowing under non-current liability. Then can you see there is one SBP reserve. So SBP reserve will come, that is fair value of replaced award, that will be SBP reserve. Are you able to follow me? Yes, sir. And NCI will also come. So when you do this journal entry, of course the difference will come, capital reserve. You will be able to understand this is the effect in the consolidated balance sheet. Okay, sir. And there is one transaction cost. The transaction cost, what journal entry? Retained earning account debit to cash or bank. You can see retained earning account debit to cash or bank we have done. Now we can prepare the balance sheet. So when you will prepare the balance sheet, what you should do? Correct? Batao. So we'll just add, can you help me? PP. So PP, can you see it will be the fair value? Fair value is how much? Batao. Oh, you can do it. Balance sheet you can do it. Am I right or not? So balance sheet I am not drawing. If you have understood this much, balance sheet you can draw. Okay, sir. Chalega. Correct? Yes, sir. So I will suggest that when you think about this journal entry, normally students forget about cash, securities premium, SBP reserve, they will forget. So think about this journal entry, means think about that PC. If you think about PC, you will never do the mistake in the balance sheet calculation. Okay, sir. Can we proceed? Yes, sir. We can proceed. Yes, sir. You can do it. Now, one more question 43. Come to the question 40. That can be also one of the expected question, because new question until now not asked in exam. Come to question number 43. 43. What is given? On 1st April 2001, J Limited acquired a new subsidiary B Limited, purchasing all 150 million shares of B Limited. The terms of sale agreement included the exchange of 4 shares in J Limited for every 3 shares acquired in B Limited. It is 4/3. Okay. On 1st April 2000, market values of shares of J Limited is 10 and market value of shares of B Limited is 12. So J Limited acquired, to be one market value of shares of J Limited. The terms of shares purchase included the issue of 1 additional shares of J Limited for every 5 acquired in B Limited. So 1 additional means 1/5 for every 5. If the profit, so it become contingent consideration. If the profit for the 2 year ending 31st March 2002 exceed the target figure, the current estimate are that 80% probable that management of B Limited will achieve the target, because the probable, it is the contingent payment is probable, therefore the fair value of contingent consideration is required, but in the question fair value of contingent consideration is not given. It means we need to calculate. How to calculate that I need to inform. Legal and professional fee associated with the acquisition of shares. Acquisition of B Limited shares were 12 lakh, including 2 lakh relating to the cost of issue of shares. Means out of 12 lakh, 10 lakh is the direct acquisition cost and 2 lakh is the cost of issuing shares. As per India's 103, this will be charged to profit and loss account as an expense, and the cost of issuing shares will be deducted from equity as per the requirement of India's 32. Okay, sir. Means this will not be considered in calculation of PC. The senior management of J Limited estimated cost of the time that they are fairly allocated to the acquisition is 2 lakh. The figure of 2 lakh is not included in legal and professional fee. When this becomes 2 lakh, additional expense that will be also charged to PL account as an expense. This will not be a part of PC. Okay. The individual balance of B Limited comprised of net asset that had a fair value at a date of 1200 million. What is the fair value? That is 1200 million. Okay, sir. Additionally, J Limited consider B Limited possesses certain intangible assets that were not recognized in the individual balance sheet. So whether it's to be recognized or not recognized, that we need to understand. Customer relationship, reliable estimate of value 100 million. This value has been derived from the sale of the customer database in past. Of course, customer relationship will be the definition of intangible asset, and therefore it will be recognized. So it means 1200 will do 100. Okay, will plus 100. An in-process research and development project that has not been recognized by B Limited since the necessary condition laid down in India's for the capitalization we are just satisfied at 31st March 2002. However, the fair value of whole project, including research, is estimated at 50 million. So, if any research and development expenditure which was not capitalized in the books of acquiring company can be recognized as an intangible asset in the books of acquirer if it meet the definition of intangible asset. So of course it will meet the definition of intangible asset, and it will be also recognized as an intangible asset. Employee expertise, never, it will never be recognized as an intangible asset, therefore it will not be considered. The market value of shares in J Limited was 11 on 31st March. This is a point which we'll think later on. So it become 1350. So the fair value of IN is 1350. Compute a goodwill on consolidation of B Limited that will appear in the CBS with necessary explanation. So first we need to find out PC. PC will be how much? How many shares they have acquired? 150. So can you say 150? Swap ratio is 4/3 and the value of shares is 10. So this two we can find out. And we need to also find out contingent consideration. The contingent consideration will be 150 into 1/5 into 10 into 80%. Will you do 80%? No. Here you can do mistake. Into 80% wrong. Even though 80% is probable, but can you see, we'll take most likely outcome method, because 80% probable, 20% not probable. So we'll take most likely outcome method. So it will be this amount. So this will be 2300 is the amount of PC. Okay, sir. Then can I say we can find out this we can find out. One note has been given about legal and professional cost that you can read, that will not be included in the amount of PC. Then we can find out goodwill. This minus this will be goodwill. Okay, yes sir. Now can I say, because this is a contingent consideration and it is a fixed number of equity shares, fixed number, it means it will be classified as equity. If it is classified as equity, can I say no subsequent measurement? It will not be subsequently measured, and therefore this information is also not relevant. If it is a financial liability, so it is variable number of equity shares, then can I say at the end of the year it will be remeasured at ₹11 and the difference will be transferred to profit and loss account. But in this question it is a fixed number of equity shares, therefore it will be classified as equity, therefore no subsequent measurement. Understood? All the questions we have done. I hope you have understood business combination, all the expected questions. If you have understood it correct, just comment in the comment box whether everything was okay or not, have you understood or not, and whether you like more chapters like this or not. Whatever chapters you like, जो भी chapter आपको और चाहिए to be discussed before exam, just give me that chapter name. I will take first chapter of that nature. जो भी आपको लगता है कि ये chapter पहले लेना चाहिए तो वो मुझे पहले बता दीजिए. हालांकि अगर नहीं बताओगे तो इसके बाद मैं फाइनेंशियल इंस्ट्रूमेंट चैप्टर लेने वाला हूँ. ओके सर, अगर आपका कोई डिमांड है तो आप मुझे पहले से बता दीजिए. ओके सर, आई होप दिस विल वर्क फॉर यू. ओके सर, एक मैसेज जरूर छोड़ना कि कैसा लगा आपको वीडियो, हाउ यू लाइक दिस वीडियो. जस्ट गिव ए मैसेज एंड आल्सो लाइक द वीडियो. डोंट लीव दिस वीडियो विदाउट लाइकिंग द वीडियो एंड सब्सक्राइब द चैनल इफ यू आर न्यू टू दिस चैनल, बिकॉज बहुत सारे और वीडियो आने वाले. ओके सर, ऑल द बेस्ट फॉर योर एग्जाम. लव यू. बाय बाय.